Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So the S&P 500 went up 25% last year, and a lot of that came from technology companies. Tech has done absolutely amazing, especially the semiconductors like the Nvidias, the AMDs, and those companies were up over 100%, 200%, whatever it was. And they've done absolutely amazing. Even Microsoft has participated, and there's so many companies that have done so much, gone up so much. Right now, it seems they're all overvalued when you look at how much they went up. But I found one company that seems undervalued at the moment. It's a high-growing company. It's growing their revenue, 10%, 20%, double digits easily. And I do believe this company will become one day the Microsoft of the future. And I'm sure if you've been in this, basically with me in this journey, you would know which company I'm talking about. But before we get to that, I would like you to subscribe to the channel because it honestly helps me, gets me motivated, keep going. Okay, that's one. Number two, like the video. It doesn't cost a penny by just clicking that button. Honestly, it genuinely helps. Number three, if you can join us on the Patreon account, that would be absolutely amazing, where you get all the buys and sells that I'm making frequently, all the stock watch lists, the dividend calendars, private discourse, and everything else, including the Sharia compliant investing ebook, which will help you if you are a new investor. Now, the company I'm talking about today is this company, CRM or Salesforce. And this company is up, since the beginning of the year, 79%. So for the 1 year, it's up 75. For year to date, it's almost, of course, it's year to date as well, like 10 days it is into the. But when you look at the last 5 years, okay, for the 1 year, 75. Last 5 years, about 75. Last 10 years, 340%. Okay, so it's done really well, and it has, in comparison to where it used to be, it has a lower forward PE right now of 31 right now. Now, one thing I'm going to do is I'm going to look at the financials first, and then we're going to look at some of the metrics, and then we'll look at their basically recent quarter, what they reported. We'll look at the valuations, we'll compare with other companies, and then at the end we will look at my own evaluation and what I'm going to do with this company moving forward. As you can see, the revenue from 2014 was $4 billion to right now $33 billion or $31 billion. That's the trailing 12 months. 34, closer to $34 billion. That's 30 billion from where it was in 2014. Now, the net income, okay, is not going to be as glamorous, okay, because this company has been reinvesting a lot of that. So in the first 3 years, so 2014 to 2016, okay, it wasn't that great. But 2016 onwards is actually been going up every single year, and then it was a bit of a decline in 2022. I think it was around this time that I sold, because there was a bit of a fight with the CEO of the company and a lot of things that was happening. He was just becoming more of a celebrity rather than focusing on margins and so on. And since then, this guy has changed things. They're focusing more on now improving their margins. And the last 4 quarters, they've actually improved their margins more than any other company in these in the software side of things. This company actually sells. This company is actually the company that came up with software as a service. They were the inventors, if you think about it. So when they first started software as a service, meaning, by the way, like right now, Adobe, remember back in the days, if you're buying Photoshop, you buy Photoshop and with the CD and you install it and then that's it now, whatever. Right now, if you buy it, you just go on the cloud, just click the link and download it straight away, and then you basically pay subscription rather than just buying one-off CD. So that means every year you have to renew rather than buying the CD, keeping it until they update it, and then buy the next one, and then so on. So it's easy now to download it, and software as a service is changed the game completely, and they were pioneers when it comes to that. Just looking at a few more things. So the market cap is $253 billion. Of course, the company doesn't have any dividends, but look at the earnings per share from 2014 to up to now where it is. It's absolutely massive growth. Free cash flow per share is growing, heading in the right direction, which is nice to see. Earnings per share growth and sales growth is actually declining a little bit in terms of sales, and now that's why they're trying to get it back. So, but the problem with this company is shares outstanding. They have been issuing more shares because they were basically growing the business every single year. And I actually don't mind this. I'd rather companies do this than actually get interested that as debt from the banks that pay I don't know 4 or 5% every single year. That's just gonna create more problems for the company. So issuing more shares is okay. But since then, it's basically, I think it was 2023, beginning of 2023, they announced that they're buying back their own shares, about $20 billion for the next couple of years, whatever. And they have been buying. So as you can see here, they started buying back their own shares, and total sales is actually heading the right direction, which is absolutely beautiful to see. So from 2014, $4 billion that we've already seen to $34 billion, which is absolutely amazing. Return on equity 4%, return on invested capital 8%, operating margins of 16%, and the free cash flow margin of 26%. Net debt to EBITDA right now is very, very low. And that's it for this section. So let's move on and look at the company itself. Now, this is their presentation that they've done recently. So Salesforce is the number one CRM, okay? So customer relationship management software provider worldwide by revenue of 10 consecutive years, consistently delivering durable revenue growth, nearly tripling from $10.5 billion in fiscal year 2018 to $31.4 billion in fiscal year 2023. That's absolutely amazing. 10 billion to 21 billion. Fastest growing top 5 enterprise software company with 31.4 billion in revenue of 2023. Okay. And of course, there's a million other things they could talk about in their quarter. One of the things that I actually liked is the quote, basically year-on-year revenue growth. So this is the 2024. They're already in there. They've got one more quarter and they're going to close the 2024 rather than 2023. So they're slightly ahead of everybody else. But the total revenue was $8.7 billion, and that on year, that was actually 11% up. Every single metric here was up, including free cash flow. Okay, so I really like the company. I like what they've done. I like what this guy has done. Unfortunately for me, I sold it. I think it was $190 US dollars at the time, I think, when I sold it. And the reason I sold it was I wasn't sure what this guy was doing. He was basically advertised. When I say this guy, he's the founder of the company. And he just became I thought he's going to become the next Elon Musk. And I didn't like the craziness that was basically happening around him. The stock wasn't doing well. There was no news coming out of the business and everything was kind of low. Since then, they have actually started to pick up. And of course, he realized, I think there was something about an activist investor that kind of made that transition. So it's been doing really well in the last 4 quarters, which is the time that I've been out of this company. Now, as you can see here, is actually trading $263 per share, and I think it's gone up as far as 268. So it's closer to its all-time highs right now. So a couple of more things I want to share with you guys, and that is, in fact, before we do valuations, we're going to go back here and we're going to compare this company to its peers. So let's go and compare it with Adobe, SAP, and Intuit, those 4 companies. And we'll also use performance. We just used price returns because these companies do not pay any dividends, so there's no point in doing that. So for 3 years, let's see, Salesforce is return about 10 and 20%, so not a lot. The S&P 500 25%, the 23% for Adobe. SAP is actually about 18%, and Intuit is actually done really well, 62%. For the last 5 years, 77%, 84, 148, 48, and 193. So these two have done better, and the S&P 500 actually slightly done better than that. Wow, interesting. And in the last 10 years, 336%, 150 something, 855. Wow. 90 and 680. So it hasn't actually performed as well as the rest in the last few years. And as you can see, out of the 3 in this line here, the orange line here, it's basically the third place when it comes to the last 10 years when you look at the total returns. But again, that doesn't mean it's going to basically do that for the future. Now let's go to earnings and let's talk about what basically attracts me to this business. And the expectations for 2024, so when they report the final quarter, is basically up. The EPS will be up 56%. The following year is almost 17%. Then another 17%. Okay, so if we just focus on first three, there's 48 analysts and 29 analysts looking at this, which is absolutely wonderful to see. And every single year from there onwards, apart from this year and this year, is almost double digits, basically over double digits every single year up to the 2023. This is what I mean. Microsoft was doing this type of things in early 2000s and then here and there, and then now you've seen what they're doing. Okay, so they're being consistent, and I genuinely think this company will become the Microsoft of the future. Revenue from $34.7 billion to, where is it, $42 billion, almost $43 billion in 2026. So yeah, this is one of the reasons I genuinely feel like this is probably one of the best companies out there. Now let's have a look at what the analysts are saying about the company in terms of where they think the price is. As you can see here, Seeking Alpha analysis is saying is a buy, Wall Street is a buy, and Quant, which is the system that they use, okay, they input a lot of data into it, and what comes out is basically some sort of a rating, and right now it's almost a 5. Okay, so that's a strong buy from this company. If we look at Wall Street expectation in terms of price wise, you can see 178 right now. That's 5% up from where it is right now. If we look at Morningstar, it's 3 stars right now, fairly valued. $267 per share is where they think the price should be. If we look at simply Wall Street, $355 per share is basically where they think. That's about 26% up from here. So almost everything that I've seen so far says that this company is actually right now undervalued. Now, I took all of that information, took Morningstar information, simply Wall Street, Seeking Alpha, as well as my discounted, that should be discounted, cash flow, and that kind of gives us average intrinsic value of $320 right now. The current price of the stock is 263%. That is about 22% up, basically difference right now. And margin of safety, this is the type of business where you need a very high margin of safety because anything can happen. Okay, yes, the revenue is growing, it's a great company, but it has now stabilized a little bit. It's not as, speculative or anything like that. So even 15%, 10% and above is what I will give myself. So even if I do 20%, it's 256. If I say, okay, I'm interested in the company, I like the company, okay, and I want a 10%. If that's what if I say that, then the current price will be 208. So the buy price will be 288, and that's basically higher than where it is right now. So which is basically quite good, right? But then you might say, okay, 15% will probably be safe. That's 272. Again, it's basically higher than where it is right now, so it's still a buy. But in my opinion, I would go with 20%, and that's to change the wrong thing. And that's 20%, and that for me is 256. So what am I doing with the company? I would definitely be interested in the company. I'm gonna watch. Despite me selling it not long ago, I'm gonna buy it back and sooner or later. And what I'm gonna do, inshallah, is because I need to diversify my portfolio, I absolutely have to make sure there are some high growth companies. I do have the ASMLs and the Broadcoms and so on, but a lot of these companies are in the semis. I have Intuit, which is very, very similar, but is really expensive right now. So the two companies are in the software side of things, but they are right now, this one is very expensive right now. So hence why I haven't added to. So I wouldn't mind actually adding Salesforce in the future, inshallah. I'm not saying I'm going to buy it next week, by the way, but I'm looking into basically adding that to the portfolio, inshallah, maybe in this year within, you might see it soon enough, whatever. So that's what I want to do, because as always, like I've always said to you guys, you're going to have to balance your portfolio and make sure that you're looking at what you have. Oh, by the way, I have Visa as well, which is kind of high growth company. So I'm talking about companies that are growing their revenue double digits, and you need those companies as well as the Rio Tintos and the Unilevers, the stables that kind of help the portfolio stabilize a little bit, your foundational stocks and whatever. So anyway, that's me. If you're interested, of course, you do your own research, might find out a bit more information before you actually put any money into those companies. Anyway, I hope you're enjoying this type of content. It takes a lot of time and effort to do this research. I would really appreciate if you can join us in the Patreon account, if you can join us on the Discord, if you can, like the videos, it doesn't cost you a penny, and join us on on this journey, inshallah. Have a wonderful day. Assalamu Alaikum.